What if I told you that a single stock exchange makes more money in one day than some entire countries make in a year? And that's just the beginning of what most people don't know about the stock market. Stick around because I'm about to blow your mind with 5 incredible facts that even seasoned investors might not know. Hey everyone, if you're new to investing or just curious about how the stock market really works, you're in the right place. Today, we're diving deep into 5 lesser-known facts about the US stock market that will completely change how you think about Wall Street. Make sure to hit that subscribe button and let's get started. Fact number 1. The speed of light advantage. Our first fact is straight out of a sci-fi movie. Did you know that some trading firms spend millions of dollars to shave off just a few milliseconds from their trading times? We're talking about high-frequency trading, where computers make thousands of trades per second. Here's the crazy part. These firms actually run dedicated fiber optic cables in perfectly straight lines between major cities. Why? Because light travels faster through a straight line than through the curved cables that follow roads and infrastructure. Some companies have spent over $300 million just to get their trades to execute 3 milliseconds faster than their competitors. To put this in perspective, you blink your eyes in about 300 milliseconds. These firms are fighting over advantages that are 100 times faster than a blink. In the world of high-frequency trading, microseconds literally equal millions of dollars. Fact number 2 will make you question everything about market timing. There's something called the January effect that has puzzled economists for decades. Historically, small cap stocks tend to outperform large cap stocks, specifically in January. We're talking about a pattern that's been observed for over 40 years. The theory is that investors sell losing positions in December for tax purposes, then reinvest that money in January, driving up prices. But here's where it gets weird. Even though this pattern is well known and documented, it still happens. You'd think that once everyone knew about it, traders would adjust their strategies and the effect would disappear. But nope, it persists, making it one of the most enduring market anomalies. The January effect is so reliable that some fund managers base entire strategies around it. It's like the market's worst-kept secret that somehow still works. Fact number 3. The New York Stock Exchange generates approximately $20 to $30 million in revenue every single day just from trading fees and data services. Let me put that into perspective for you. The NYSE makes more money in one day than the entire operating budget of some of the largest cities in the nation, like Chicago and San Diego. And this is just one exchange. When you add up all the major exchanges, NASDAQ, regional exchanges, and electronic trading networks, we're talking about hundreds of millions of dollars flowing through the market infrastructure every single day. The craziest part? Most retail investors have no idea they're contributing to this through the small fees built into their trades. Every time you buy or sell a stock, a tiny fraction goes to keeping this massive financial machine running. Fact number 4 takes us back to one of the most bizarre chapters in stock market history. During the dot-com bubble, a company called Pets.com went public and achieved a market value of over $300 million. But here's the kicker. Pets.com was losing money on nearly every single sale. They were selling 50-pound bags of dog food for $39, but paying $59 to ship them. The company was literally paying customers to take their products, but investors didn't care because it was the height of the internet frenzy. The company's sock puppet mascot became more famous than most movie stars, appearing in Super Bowl commercials that cost millions. Pets.com went from IPO to bankruptcy in just 268 days, less than 9 months. Yet during its brief existence, it burned through over $300 million in investor money. This story perfectly illustrates how market psychology can completely override basic business fundamentals. The lesson? Sometimes the market can stay irrational longer than you can stay solvent, but not forever. Our final fact sounds like a conspiracy theory, but is actually documented reality. There's an unofficial group nicknamed the Plunge Protection Team, or PPT, that can intervene in markets during extreme downturns. Officially called the President's Working Group on Financial Markets, this team includes the Treasury Secretary, Fed Chair, SEC Chair, and CFTC Chair. They have the authority to coordinate emergency responses during market crises. During major market crashes, like in 1987, 2008, and 2020, this team has coordinated massive interventions. We're talking about injecting hundreds of billions of dollars into the system, adjusting interest rates, and even directly purchasing securities to prevent total market collapse. The wild part is that they don't always announce these interventions immediately. Sometimes the market mysteriously rebounds from what looked like certain disaster, and only later do we learn about the behind-the-scenes coordination. This means that the free market isn't as free as most people think. There's literally a group of government officials who can step in and change the game when things get too scary. So there you have it. See, Börse making some money. 5 incredible facts about the US stock market that most people never learn. From light-speed trading wars to government intervention teams, the market is far more complex and fascinating than it appears on the surface. The key takeaway? The more you understand how the market really works, the better investor you can become. Knowledge is power, especially when it comes to your money. Which fact surprised you the most? Drop a comment below and let me know. If you enjoyed this video, smash that like button, subscribe for more investing content, and hit the notification bell so you never miss an upload. Thanks for watching, and I'll see you on the next one.